Nigeria's equities market rose further by 1.21% on Thursday, pushing the market's benchmark performance indicator, that is the all-share index, above 74% mark, 74,000 mark. This is just a day after the all-share index crossed the 73,000. The market capitalization of the Nigerian Exchange Limited also crossed the 40 trillion naira mark at the close of trading on Wednesday. This comes 10 months after the market cap hit 30 trillion naira on the back of the interest of domestic investors. This has earned the local bourse the enviable position of one of the biggest gainers from the reforms implemented by the President Bola Tinubu's administration. At this time, Garba Kurfi, CEO, APT Securities, joins me on this. It's nice to have you around, Mr. Kurfi. Now, the equities market opened this year with its all-share index and equities capitalization at 51,251.06 points and 27.915 trillion naira, but have now risen to over 74,000 points and over 40 trillion naira. What are the factors responsible for this rise?
Well, the major factors are the change of the government. We have got the president who understands the working of the economies, in the sense that every of his single statement add value to this market. Remember, capital market is the future market. To look what is likely going to happen in the very near future, I reflect it. Before the recession, capital markets have already gone into recession even before the entire economy went into recession. That tells you how capital market react and proact before the happiness. So it shows you that from the time he was swear to date, all the gain that we are claiming that the market have gained have got it from June 2023 to date. And this gain reflected what happened in 2020. Remember, in 2020, all share index gained about 53%, which we never earned it in the last 15 years. Today, a replication of this, because that is for the whole year. And this one is just for 7 months, the market have gained 43%.
So how significant...
this market likely going to close between 47 to 50% before the end of the year.
Okay, so how significant is it for the ASI to reach 74,000 points in just one day?
Well, this is the landmark position that in the history of the capital market, we never earned it, even in the year 2007 and 2008, when the market was bubbling. And this comes because we have formidable companies that stand for this institution, and they are now listed. Take Airtel Africa. It's not Airtel Nigeria, it's the entire Airtel Africa. Then we have the UBA that is across 17 countries. Then we have Dangote that is across about 15 countries. So the Nigerian exchange now is no longer for the Nigerian market, but it's for the Africa. And today, we are number one in terms of performance across the entire African exchanges. And globally, we are number 3. And that shows how far the market have gone within this short period.
So now that we see the equities market has weathered the first 6 or 7 months thereabout, and of course it might be on course for yet another record show. But then are there some factors that could derail the markets that we need to consider?
Well, generally the factor that derail the market are the foreign investors, who at any single action, because they don't understand our economy, they overreact. Go and check the history in the past. There is no election year that the market did not record negatives. But this year, it was not. The market was positive in 2020, it was positive in 2021, it was positive in 2022, and positive in 2023. Why? Because the Nigerians who understand the Nigerian market are the major players, particularly the pension fund industry. They are one of the great players in this market, and they are Nigerian and they understand Nigerian. So nothing fear them. So running helter-skelter for any slight changes in the policy will not happen to Nigerian, because we are Nigerian, we understand ourselves. And that is one of the factors that make us, we are not likely going to derail anymore, because the foreign investors who doesn't understand our economy, with slight changes, they rush into the market to sell also and run outside of the country are no longer there in the market.
So for traders and investors, what you're saying is that all is well and good, or there are some cues that they should still look out for when making investment decisions in the stock markets.
Definitely, sure. One of the major beneficial of this factor is the banking sector. Because of streamlining the exchange rate, a lot of them, they make foreign exchange gain because they keep these dollars in their bank's account. So because of this is not likely going to be repeated in the 2024. So the upturn we witnessed in 2023 for the banking sector is not likely going to be repeated in 2024. Similarly, the interest rate that is very high because of the inflation that almost hit 30% is not likely going to be repeated.
Okay.
We're envisaging the inflation may come down to 20 by next year.
Kassimu, Garba, Kurfi, thank you so much for your time.
Thank you for having me.
Sorry about that.